Let's go check out the little stones in the marketplace, maybe milestones as well. Right now, Dow futures are up 57 points. They're trading out at 15,970. S&P futures up 4.5 points, traded out at 1797.75. 1,800, oh, so close out there. NASDAQ futures up 2 points, trade out at 34.18. Russell 2000 up about 3 points at 11.17 or so. U.S. dollar index back about 17 ticks, traded out at 80.72. In the currency market, the Aussie dollar's got about the largest movement at the moment. In the metals marketplace, Goldilocks back $4, not a big deal. Maybe not a big deal. It's trading out at 12.83. Silver's down 6 pennies, trading out at 20.66. Light sweet crude is flat. It's trading up 9 cents at 93.92. Our call-in number, 877-927-6648. You give us a call, folks. We'd love to hear from you. We can take a look at your stock chart. We'll analyze it as best as we can with as many tools as we have in our arsenal. We take a quick peek across the pond out here. DAX is up a nice 77 points, about 0.9% right now. FTSE up 35 points. That's up about 0.5% over in Asia last night. Oh, my goodness. The Hang Seng celebration mode, fireworks, the whole kit and caboodle up 2 7/10%, 628 points. The Shanghai, that was up about almost 3%, up 64 points. The Nikkei finished flat, down 1 point at 15,164. Okay, so where do we begin out here? Where do we begin? Well, first let's take a look at my favorite currency pair and yours. That's the Euro-Japanese yen out here. Now, the Euro-Japanese yen been traveling in a sideways consolidation box. It's up towards the top of its consolidation. The number that it has not hit yet, that it is trying to hit, we'll see if it can, is going to be the 135.43 area. That was the swing point high from October 30th. You know, it has... we'll see if it can actually make it up there. Now, the key question with regard to this market continuing to move higher, because this is the jet fuel for the market out here. And the jet is either going to run out of fuel, meaning that it's going to hit the top of this consolidation range and back off. And if it backs off, the likelihood is that it'll come all the way back down to the bottom of the consolidation range. Now, what level of movement or retracement there is in the markets, no way to decide that or determine that, because this is just simply a directional correlation. It is not a tick per dollar correlation between one tick equals, you know, a quarter point in the S&P or something like that. It doesn't work like that. But it is a guide map for what direction the market is going to travel in. So, from a bullish standpoint, what I can tell you is you want to see these highs from October 30th. You want to see this consolidation box get taken out. Now, this is the third time up here. Third time could be the charm. Now, third time up here says we've got to be careful. That doesn't matter how bullish you are. Doesn't matter what the charts look like out here. This is a 1.618 butterfly pattern. First time up here was on the trading session of October 22nd. Backed off just a tad. Went back up and tested that area on October 30th. We are back up in this area this time. If it can't break through there, that would absolutely be giving us, that would have to make you say, would it make me say, something to think about out here. So it's the third time up. Now if it breaks, and the reason why that's important, because if you take a look at this currency pair and its chart patterns out here, it's spectacular. And in essence, this is a 1.618 butterfly. It most certainly worked if we take a look at coming off of the A point of the A to B equals CD that formed the butterfly pattern out here. You can see that what it actually did was about a 0.618 retracement of that entire move down to the 130.84 level, but it only got down to 131.20. But that's really the bottom of the consolidation, so that works for me out here. So that butterfly pattern most certainly worked out there. We'll see now what this consolidation pattern does. But this is what we want to be paying attention to for sure. Now, if we go take a look at what's going on the intraday basis out here, because this is certainly what I am paying attention to, you can see we've got this little rising price channel. Those are the black diagonal lines coming off of the low out here. This price channel, this was established back at about 2 o'clock in the morning on November the 8th. You can see the bottom of the price channel, the black line. If you're watching us on TigerTV, look, if you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always catch this show live, streaming live to your device by going to the homepage of TFNN. Over on the upper right-hand side, you'll see a button, 3 little smartphone devices. Click on that. The show streams live. And, of course, what you can always get is the archive of this on Channel 9. And what we're looking at here, if you're listening on the radio, if we just simply use the open session here of the trading day, 2:30 in the morning, we'll use November the 8th. That was about 1:31:53 out there. We're going to use the close of the trading session at 8 o'clock in the morning on November 13th. That was at we're using a 30-minute chart out here, by the way. We're using the close was at 1:33:41 out there. And you can see that that price channel runs right into the these two sessions, the open and the close. We'll just simply use the open at 2 o'clock in the morning on November 15th. We've anchored pretty well into the bottom of the rising price channel. And what happened here in the wee hours of the morning, while most of us were sleeping out here, that was at 12:30 in the morning, we saw the bottom of that price channel get broken, just as it did right back here, this little cluster during the time period of November the 13th. In fact, if we go ahead and we put our relative strength, relative weakness indicator out here, you can see the last time down inside this area when that price channel was broken, price had actually moved into the oversold condition. But what's interesting about this is not this time. This time, as it broke that price channel, as it moved to a lower low, coming in at 4 o'clock this morning, it was not in an oversold condition. So that bounce here was not just simply a oversold bounce that needed to bounce. All that's what's really going on here right now is price is trying to get back inside the rising price channel. It tested it. It tested after it broke out of it at 12:30. Tested at 1 o'clock. No. Said sorry, can't let you back in. It tested it again at 1:30. Sorry, not going to let you in. It tested it again, and at 2 o'clock the bears came and said, not a chance. Well, you know, the bulls were saying, hey, maybe those bears are sleeping. Maybe they had a nice big meal out there. Maybe they're sleeping. And price tried to get back inside at 6:30. Price just hovering around this line out here. It is the area that we want to watch, as well as the 135.15 mark out here. If, in fact, price gets back inside the rising price channel, we will see the Euro-Japanese yen move up to about the 135.60 area. It'll go ahead and it'll spike that daily. It'll spike our markets higher out here. Spike. You know, I'll get the word out here. Spike our markets higher so that they can move on, at least the ES Mini, move on to the 1802 level, where it should run into some substantial resistance out here. I mean substantial resistance. And it's going to be a key area to watch the battle unfold. Because if that resistance area holds, if we see price spike up there and then move back lower, folks, it sets up a retracement. So we've just got really two things that we have to be paying attention to. We're going to pay attention to more, but it's really going to be the Euro-Yen, and it's going to be the ES Mini out here. If I switch over now, I created a tool over the weekend. I shared it with my clients this morning. Because I'm still doing some testing on it, for the next couple of hours, I'm going to be probably using that so I can, as long as I've got to do my work, I might as well get it accomplished here during this couple hours. And maybe you'll call in and maybe you'll want me to apply that same tool to your stock chart out there, which I'll be happy to do because I've got to do some testing anyways. I'll show you how it works, and it's really the primary trading range automation tool out there. Bud Rolfs is the one that brought to us all the information about primary trading range boundary lines out here, and I've been trying to automate that because trying to do things visually, well, you can make some mistakes out there, and let's face it, we've got the information available to us, and so what I've done is created a tool to automate that process. Spent a good part of the weekend developing that, testing that out, so it's going to need some more testing, and the cool thing is, it works on all instruments. It doesn't matter what you trade. You could trade corn, you could trade hogs, you could trade anything out here, any time frame. The tool works on that. When we get back from this break, I'll show you how it actually works out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done And this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much changed in the marketplace out here. So if you're watching us on Tiger TV, if you're watching, maybe you're listening or you're replaying this archive out here on Channel 9. I've got the you're familiar with the software. You see my charting package on the screen, for a couple hours a day. It's one of the I use really 3 primary tools out there. I use Ensign software. That's one that we're looking at. Ensign Windows. I use some Ninja Trader. I do some programming on that for some strategies that I have, some market analyzer tools that I've built. I use the Art of Timing the Trade charts out there to really understand the power law, vector indicator, and all the potential Gartley and butterfly patterns that are set out there. It's always great to have several tools in your toolbox. In the Ensign software, we're looking at the SPY chart. So I'm going to do this. I'm going to first do this, show you how to use this tool, or how I use this tool here, what I've developed on the SPY monthly chart. I'm going to simply start on the monthly chart. Now, Bud Rolfs is the one that really has brought to us the primary trading ranges And what he's using out there, he's using, co-located opens or closes in the marketplace, because the body is truly the essence of price. So that thinking really lines up with my candlestick approach out here, candlestick thinking, and it's really the body is truly the essence of price. The wick, the wick of the candle, the shadow, upper, lower shadow, however it is you're going to refer to it, is nothing more than the emotional extreme out here. So inside Ensign, they've got a little tool. It's called ESPL. That stands for, I assume it stands for Ensign Software Programming Language, because that's in fact what it is. So I've created this little program out here, and I'm going to go ahead and run it. And when I run this program, what it does is it goes out and it takes a look at whatever the data is on the chart on my screen. It goes out there and it identifies each open and close, does the math on it, and then it comes back to me and it shows me within a variable range that I have set here. You've got to have a little bit of a tolerance here. It identifies the top 20 price areas where there were opens and closes, and what it does is it gives me the information to understand. I've got to use a different chart over here on another screen just to go ahead. I'm going to paste the data in here so that I can refer back to it. But what you can see over here on the left-hand side, what this tells me is that there were 18 occurrences inside of the SPY that closed right in that range of 111.11. I've got a small little tolerance window out here. And so it shows me 18 counts out there. Now, it also shows me, at 132.24, there were 16 opens or closes. So it gives me the entire range out here. Now, what I'm going to do is, because it's small enough, I can do this off to the side here. I'm going to come back into my chart. And what I've determined here, now, let me go ahead and delete this line here, because the last phase of this is automatically applying all of this data. And before I actually build that piece of the tool and confirm that piece of the tool, I want to make sure that I've got everything here working accurately. So very close to that. Now, in this case here, we know that 111.11 is what I'll call the real primary trading range. How about that? So two P's out here. Now, I'm just simply going to use my little parallel line tool, and I'm going to try to identify, the price point of 111.11 out here. I've got 111.15, 110.99 out here. You see, when I get the actual tool written, it will draw the line in the exact spot, just simply because of, who knows, the mouse, wherever. So 111.15 is what I'm going to use versus 111.11. I come back out here. I identify 111.15 out here on my screen to get it to line up. There we come on. There, 111. Come on, Steve. I know you can do this. You're on. There you go. 111.15. Now, the next area that I'm going to use is 2 levels above. So at 111.11, the next area, primary trading range, 125.20. So I'm going to get up to 125.20 out here. And once I hit that, 125.29, let's see, 125.14. It looks like I'm going to use 125.29. Now I can come and take this tool here and automatically draw in the primary trading range. Now I can do the bottom as well. I'm not going to waste your time right now and do that. I'll apply that to the chart during the breakout here. What's important to be paying attention to here is you can see at 181.54. 181, and what you can see here naturally, if you take a look at these primary, and this is the monthly chart, because we can do this. I'll do this on a weekly chart, on a daily chart. We'll do it for the whole kit and caboodle out here. And what's so great is it works on any chart, intraday chart. Doesn't matter what it is that you're trading. But what we can see here is that price right in the level of 181.54 is the next monthly overhead resistance area. Because these opens and closes here, these are the areas where you run into significant, these are where the battles are formed. And if you're a bull, what you want to see is you want to see price get above 181.54 for the entire month, stay above that area, come back and test it in the month of December, and then off to the races as it would move up to the next level out here. I don't have that marked here on the chart, but we can figure that out. How cool is this, folks? Think this would help you and aid you in your trading out there? I know it will for me and mine. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 63 points, trade out at 16,024. S&P is up about 4 points, trade out at 1801. Composite up 6 points, trade out at 39.92. Russell 2000 up 2 and about $2.70, trading out at 118.93. Apple up $2. Microsoft down 45 cents right now, off 1 3/10% out here. Cisco is flat. Intel flat. Leading the charge, the upside, I don't know what this is, Intercloud Systems out here. we won't pay much attention to that. I pulled up the stock chart out there. Now I'll have to investigate that, but that's a leader in the and it is really all about the clouds. You've got now Boeing getting above those clouds out there. Boeing now the leader in the clubhouse, up a little over $5, up 3 7/10% out here. Cena Corp up $3. Voxel Jet up another $4. Jinko Solar, that's taking advantage of cloudless days out there, right? Solar needs the sun. It's up 10% this morning, up $3 and change. Baidu up $3. Amazon up $2.75. Apple up $1.30. The Tile Shop up $1.67. To the downside here, leading the charge is Netflix, off about $2. Not a big deal out there, up about 0.6%. Renewable Energy, REGI, down 12%, off $1.60. Tesla Motors off $1.35. LinkedIn down $1. Darling International, DAR, that's off about 5%, down $1 right now. Aruba Networks off 6%, down $1 out there. Call number 877-927-6648. You can see on my chart here, the monthly chart now, for the ES Mini, continuous chart obviously, 1802 is the top of the monthly, its next monthly primary trading range boundary. Should we see that level fail, meaning price get above it, not just poke above it today, this is a monthly chart we're looking at, so it's not going to end for another 12 days out there or so. And so it's really what happens at the end of the month. But you can see overhead resistance at the 1802 level. If in fact price holds that area, doesn't, gets above it, comes back inside there, what it does set up is that potential to come back to about the 1686 range. It's a 116-point primary trading range boundary line that the system here automatically goes out, calculates. I showed you, I'll continue to show you as I use this tool here and refine its work out there, because really now it's all about just simply being able to have a couple of clicks and boom, have everything apply to a stock chart out here. So 1802 inside the ES Mini, that's what the monthly chart shows. If we go take a look at, I guess I don't have it here. Where do I maybe have it? I got so many new tabs out here from doing all the tests over the weekend. Let me see if I've got the ES Mini up here on the 30-minute chart here. Just take a look at a 30-minute chart. There we go. So the 30-minute chart here for the ES Mini, it also shows 1800 as being on a 30-minute basis. Also shows it as being a significant area of resistance. So we should see a little spike here. It's trading at 1799. Spike up into the 1802 area, as the monthly chart shows, and then beginning to pull back out here. So this was doing nothing more than just getting the chart down to about this type of a level, running that tool and identifying each of the primary trading range boundary lines out here. And you can watch how price just simply travels within it, tests it. Once it breaks it, moves up to the next level. In this case here, looks like it probably got a little bit sold or overbought, I should say. In fact, let's go ahead. Let's put the relative strength indicator up on the chart out here. Most certainly, as price was breaking above this primary trading range boundary line, we can see that price had gotten into that extreme sold or overbought condition, broke back inside there, boom, all the way back down to the bottom of that boundary line out there. So that's something that we want to be paying attention to here as price approaches that $1,800-ish level. And we'll certainly pay attention to the candles that are formed. Now, if price gets above 1,800, comes back and tests it a few times, well, then it could be off to the races here. This is a 16-point range. So if price inside the ES Mini gets above 1,800, well, guess what? Next up on its chart, or next up on its plan, its roadmap for success out here would be about the 1816 level, the midpoint being about 1808. So that's what's going on inside the 30-minute chart for the ES Mini. Let's go take a look here. Let's go look at the commodities, currency pairs, and then we'll come back to some of these stocks here, popping and dropping. We'll take a look at those. So let's go take a look at what we have going on inside of gold. Let's start off with Goldilocks out here. Gold right now, as I've mentioned here, gold needed to meet with conviction in order to really confirm a breakout, and it can still do that. We're early into the trading session, but my eye is on that October 15th swing point, the top of which is 1287.70. We saw a slight close above it coming into electronic trading here on Friday. We saw it close at 1289.60. 1289.60 versus 1287.70. To me, that's not conviction. Volume on that swing point, 110,000 contracts. The swing point here being October the 15th, and what we saw here on Friday was 159,000 contract, so not too shabby there. So price pulling back, it's we need to see a break of this area with conviction. Now, of course, we've been showing here on gold. The real problem with gold is not really just breaking above that swing point. It's really going to be what happens as it because it's narrowing down here as price continues to move sideways. What it's narrowing down to is what's it going to do when it gets into this downtrend price channel out here. That's the red diagonal line going across my screen. If we could see gold get above that, that should really get folks' attentions out there. At least technical chartists, it'll certainly get their attention because that would indicate an actual breakout. Likewise, hits that area, rejects it, and moves lower. It just says that Goldilocks wants to trade lower. And if we take a look at longer-term charts out here, in fact, I believe it's probably the weekly, the monthly. Let's see here. Do I have it on the monthly? I don't have the... yeah, sure enough, I do. So you can see at 11.56, right now you've got gold in between floors. And what I mean by floors is just simply coming back into the lows in 2008, all the ways up to the highs out here in 2011. And you can see the 0.618 retracement is 11.56, and the 0.382 is 14.50. So 11.56 is still a game out here inside of Goldilocks. That's the monthly chart that we're looking at. If we take a look at silver out here, silver, that, as we know, attacked the swing point low from October 15th. That had 28,000 contracts, and it attacked that area with 55,000 contracts. That says at least another test of 2049, but really now because it had more volume on November 11th, what you really want to see in order to get bullish on silver is at least the test of 2041. Get back above that and do that on lighter volume, lighter than 55,000 contracts out here. Right now, just simply moving sideways and working off of an oversold condition. That's all that really silver is showing us at the moment. So maybe, that little divergence that we've seen here where silver is trading lower, has hit the October 15th swing point, and gold hasn't. Maybe the message is that silver is saying it wants a lower price out here because the way that it's trading here right now with these small-bodied candles, that is not a bullish sign out there. That's on silver. Let's take a look at light sweet crude here. We got light sweet crude. It's just trading sideways. It, too, is doing the same thing by just simply moving sideways out here because all it's doing is working off that oversold condition inside of the marketplace out there. So what does that set up? That sets up really a move back down to the bottom of the trading range out here in the 85 level. So this is the, let's do this. Let's go and do this actually with light sweet crude. Let's go ahead and put the Steve-O Butto primary trading range tool that I've created out here. Let me go ahead and just simply erase everything off of this chart because we can always put all that stuff back in there. Let's just delete it all. There we go. So, and this is all the data. This is a daily chart now that I'm going to use. So I just need to call up that Ensign software programming language tool. I just need to hit my run button there. It'll go ahead and do all the calculations. So what this is doing, what it did there quickly is it took a look at every open and close that was listed here inside of the chart. So I've got it applied to the specific chart out there. So it takes a look at whatever data, and that way, whatever the time frame it is that you're trading on, it's going to give you the accurate data out here. Now, what this identifies for us, let me just copy and paste this over. I guess I don't really need to do that. I can just pull this off to the side here. We'll just do it like this. So we'll come back over here. Let me go ahead and get rid of the first line that it drew in here. You can see, so 95.55 is a point of contact that occurred 48 different occurrences of price being in that 95.55 area. So I call that I guess I should call the super primary trading range boundary line out here. So we're going to start with the super. We're going to go and take a look at 95.55. So I'm going to get my little cursor and price point out at about 95.55. Let's see, I can only get it close. Sometimes it hits exactly, hey, 95.50, that's pretty close. So we'll go 95.50, just simply come across here, line it up so I've got a horizontal line, 95.50 out here, go down just a tad. There we go, 95.50. So I'm good there. Now what I'm going to do is over on the left-hand side where I've got 95.50, I'm going to go 2 counts up because, which is going to be 107.25 out here. So let me come up to the 10. Actually, I could do it that way. I'm going to come up to the upper. We'll go to 107.25. So 107.25. Give me a second to put that in there. 107.24 is the number. Now I come back here and it goes ahead and it puts all those primary trading range boundaries in there. But what I can actually do here, since we've got price moving lower, come down to the bottom of the chart, I'm just going to go ahead and move this. So 95.55 is my core, 83.85, 72, 60.45. Let's pull this down to the 60.45 level. So as soon as I get 60.45, that's going to give me 60.42. That's close enough here. So now this is giving us our primary trading range boundary lines. Let's go ahead and apply the oversold, overbought tool out here, that relative strength indicator on the chart. So let's go take a look at that. Now what we can see here is if we're taking a look at just the daily data with inside of light sweet crude, and we look for the message here that it's providing us, we can see that price has moved back below this primary trading range, around, I don't know, the 96 area is what we will call it here. And we also know that what we've got, if we take a look at our retracements, I guess it just depends where you want to come off of a retracement level. But this is where we're talking about the consolidation pattern. In this case here, the longer-term consolidation, about the one-year consolidation. So if we take a look at what was I using? July of probably using this as the consolidation. Yeah, here was the consolidation. This was the shorter-term consolidation that I was using. But we're not even going to focus on that. Instead, what we're going to take a look at is likely here that what this is providing to us is information that says that $84 is a likely target level for where light sweet crude ought to bust back through. If you see light sweet crude get above the top of this trading range, the $96 area, then that is not likely the occurrence out here. And instead what you'll see is a move back up into that 107.50, 108 area. So that's applying. Now that's the daily chart that we use there for light sweet crude. Let's go see if I've got a weekly chart. Let's do the same thing here with regard to the weekly chart. Okay, I just deleted something. Well, that's okay. Let me put up a new weekly chart here for light sweet crude. Let's take a look at this, because from this we might be able to identify some trade opportunities out here. So let's go to the weekly chart for light sweet crude. Give me a moment. We'll put this on a weekly time frame. We'll go ahead and clear all of the data. That's too well. We won't clear all because it's got the QEs on here, so I don't want to clear that out. But let's get rid of the overlay of the S&P 500. Let's get rid of that line. Let's get rid of that. Let's get rid of that. There we go. Okay. Now I've got now this is data going back to 2002. So we're going to go ahead and run this on this chart. This is going back. It's taking a look at every co-located open or close. Does all the math for us. Tells us a 96.20 is its key. It's super primary boundary line out there, because at 96.20 in that price range we saw 35 points of contact, meaning an open and or a close out there. So let me get rid of that one parallel line out here, and let's go draw this in. And let's do this. We're going to start off with 96.20 as our number, so we'll come all the way up here. I'm at 96.15. Let's see, 90. Can I get up to 96.20? Might have to stay up at 96.15. 96.15 it is. So we got 96.15. Give me a moment here to get down to the bottom. 96.15. There we go. And so now our next point of contact here is going to be 2 levels above 96.20. That gives us the number of 109.15 out there. So if we take this up to about the 109.15 area, looks like I almost hit it too. 109.12. That's what we're going to go with. Boom, there it is. It's all applied on the chart. Now I'm going to go ahead and just simply move this lower. So let's move this lower at 96.20. So we had 83, 70, 30. We'll move down to 57.35. Let's move this down to 57.35 on my chart out here. 57.35. Let's see what the monthly is giving us. We're at 57.37. So there, on the monthly chart as well, this shows us that this area right around here, which is $97, this little PTR, that area failed. So on the monthly chart, this is giving us an indication, you know what, that price wants to pull all the way back. Here's another confirmation of that $84-ish area by taking a look at the weekly chart of light sweet crude. How cool is that, folks? Just to within basically moments, not have to eye anything, but just have the system give you all of the data. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 51 points right now. Trade out at 16,012. S&P up 1.5. Composite up 75 cents out here. And quick check-in on the Euro Japanese yen. Still continuing to try to join its friends in the rising price channel, but not yet getting back inside that area out here. Let's go check out some of the world markets out here. Mentioned at the beginning of the show, big movement overnight in China out here. We take a look at the Hang Seng Hang Seng was up 627 points out here. So let's go take a look at the Hang Seng first, and we'll take a look at the Shanghai. Now, the Hang Seng, as we pull this back here, the Hang Seng traveling in this rising price channel. It's the black diagonal lines that you see on my screen here, had formed a little Gartley buy pattern. It did that here on November the 11th out here. The Hang Seng is saying it wants higher price. You know, the ultimate outcome of any type of a Gartley pattern. Now, the Gartley pattern, if you're taking a look at all that's really required, if you go read HM's book out there, he just talks about an A to B equals CD that is occurring in the opposite direction of the trend that you want to be able to get back into. And in this case here, we saw that A to B equals CD pattern almost to the spot out here. 22,452 was the number. It got down to 22,463 out here. Now, the ultimate outcome of any Gartley pattern is that it actually forms the C point of a new A to B equals CD. In this case here, this is an A to B equals CD up, and that is exactly what the Shanghai looks like it has done out here. The 8-point being here at August 28th, that low out there, the high being September 20th, and then the C point being right down here on November 13th. Now, that is an explosive move off of the C point of that A to B equals CD up. That says 1-to-1 is a likely outcome. That would be 24,554 out there, but more likely 25,117 is a number that it wants to try to approach out there. So that is a strong move. I wish I had the volume inside of the Hang Seng. I don't have that to know if, in fact, it took out these swing points here with volume. If it did, then that is the likely outcome. The swing point being September 20th that we'd be looking at, 23,554 out there. But a nice couple of days moves inside of the Hang Seng out here. If we take a look at the Shanghai, also with a nice move, also with a Gartley buy pattern out here. That completed on November the 13th as well. Now, you can see that the Shanghai is not as strong as the Hang Seng off that move, but nonetheless still strong. Nothing wrong with it, just simply comparing the two side by side out there. And so it may be forming its A to B equals CD up, and inside the Shanghai, that would say 2617 would be on its card. So what are we going to look at here for the day? Well, first, right now, you've got the Dow is trading out at, where is it? Up 33 points at 15,994. New York Stock Exchange is what we want to really be paying attention to. It's up 10 points right now. Only has net declining issues of 27. Full bullish control on Friday. But the key number to be paying attention to, let me switch over to my spreadsheet. Let me go find that number. Should have had it written down on my pad of paper, but I did not. There we go. Pull up the data. 559 net declining issues is what is needed today in order for the bears to take back control of the market. So, folks, if you're off to start your marvelous Monday, thanks so much for joining us. Remember this, though. You have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance. It'll build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Well, I look forward to seeing you in just a few minutes. Take care, folks.